Can you tell me what was it that kind of inspired you to start Brisbane rooming houses?
Well, originally I set out to do student accommodation, but I found myself finding that the biggest problem was housing for Brisbane's key workers, and I didn't know of any builders or anyone at the time. Well, as I did my research, I found there was one builder that was doing rooming accommodation, but they were doing kind of a low-end product, and I wasn't really inspired. I was quite underwhelmed by what I found in the rooming house space. So
Yeah.
I decided to look. I thought when I looked at these rooms, I couldn't live in them. I couldn't live in them. I wouldn't want to own them, these rooming houses. So I decided to do a different model, which was better built, better designed, better furnished. And we call that now executive living. We don't do the low end.
Yep.
So what we wanted to do was something that appealed to key workers that wanted to be closer to their place of work, and were on better incomes, and wanted something better to live in.
Okay, fantastic.
Well, it ticks all the boxes, right? So
Yep.
for investors, they get a better return than any other type of investment. So
Yep.
always positive cash flow. The other one is that we're solving a problem, and that
Yep.
is Queensland's got the worst affordable housing crisis in the country, but also we're helping the community, and we're helping the renter. Most importantly, we are helping the renter. We're providing a better product for renters, so they're brand new, fully furnished, all the appliances, all the bills are paid.
Yep.
I call it convenient living because they only pay one rent and they get everything. So it's like
Yeah.
living in a serviced apartment, but instead of paying $450 a night, they'll be paying $450 a week. So it's really good value for the renter, but it's also great returns for the investor. I've never seen any type of property that can tick all the boxes like this does, because it solves the affordable housing problem, and you don't need 4 or 5 or 6 negatively geared properties to retire. You only need one rooming house.
Yeah, that's perfect. Okay. And so what would you say sets your rooming houses apart from all the other ones that are in the marketplace? Because
More care. Like, because
Yeah.
I'm not a builder, builders just knock them out.
Yeah.
And we care about the investor, we care about the renter, because I'm a rooming house provider. So even though I am a shareholder in the building company and a director of the building company, I started out as a developer, so I'm a creator. So anybody who looks up the internet and Googles me, you'll find that I was originally a political cartoonist.
Okay.
So I went from cartooning to designing rooming houses. So I come from a creative background. So I sit down and I come up with the concepts, the designs. I work with my design on the floor plans, the facades, what's involved. Every one of our rooming houses are very different to other rooming houses out there. Our point of difference is the creativity that I put in, but I also put in a lot more care into the specifications. So I'm talking about what we use to build, how we do our interior walls, how we do our external facades. The things that we're doing now, and even innovating for the next 2 years, we're making so many changes to our rooming houses, whereas what I see from other builders is the same product that was done 10 years ago. There's no change, there's no innovation, it's the same old product, and they're all kind of copying themselves or copying each other.
Yeah.
We're innovating, which means that our rooming houses are getting 20 to 30% better rent than other rooming houses in the area. They're valued at 20 to 30% more for loans, which means you're building instant equity into your property. And also they're selling for 20 to 30% higher prices than other rooming houses in the same area.
Okay, so how much rental income can a typical rooming house generate per year, gross? and net?
Ours are generating from a minimum of 118,000 in the worst suburbs. When I say that, the lowest demographic, and other rooming houses in the area are getting about 100,000. We're getting 118 to 120,000. And we're getting up to $143,000 in medium to high suburbs. Our rooms now start at $450 and go up to $600 a room.
As much as 600, okay, fantastic. And how do those returns kind of compare to a traditional investment property, like in terms of rooming versus?
I'll give you an example. So we're doing one at the moment that the houses next door are getting around $650 to $700 per week in rent. We had an investor that had a house that was underperforming. He's asked us to demolish that house, and we've now built a rooming house that will bring him $2,500 a week. So just around $130,000 a year in income.
Fantastic. Okay. And so, what types of tenants do rent these properties? I mean, a lot of people have this impression that it's for a kind of lower socioeconomic, renter, but who's typically living
They
in these
can
homes?
be. Look, it depends on the rooming house. Not all rooming houses are the same. So the ones that are at the cheaper end generally do attract people that are lower socioeconomic. I prefer not to have those because they're more problematic tenants.
Yep.
We aim at what I would call key workers, people on medium to higher income. So we've got people on incomes as low as $80,000 up to $220,000. We've got doctors, IT workers, engineers, fly-in, fly-out workers, people that are on high 5-figure to 6-figure incomes.
Okay, fantastic. And so, what would you say? Why are these rooming houses in such high demand across Queensland?
Well, they're in high demand because the product fits the market for renters and for owners, so investors. Rooming houses are the best residential investment product that you can find. That's it in a nutshell. They outperform NDIS because NDIS is very unpredictable and often NDIS doesn't perform as promised. So a lot of people are moving out of the special disability accommodation space and moving into rooming accommodation because it's not a niche market. So where NDIS is a very niche market and it's governed by government and it's regulated by government, and anything, I'm a little nervous about putting my money into anything that is subject to government regulations and laws, and also government funding, which can change any time at the drop of a hat. So I prefer something that's reliant on the open market, and rooming houses are pretty much a market-driven investment. So there's a huge demand. The reason that there's a huge demand from renters is because, as I said earlier, it's convenient living, where you pay one rent as a renter and you get everything. You get all your appliances, you get all your furnishings, you get all your bills paid just for one weekly rent. So there's both the convenience and the ease of paying the rent, where it's all in one. So you don't have to set up an internet account, you don't have to set up a power account or electricity account. It's all done for you.
Yeah, and so it's convenience, and also it's affordable, because if you had to do that with another, say, one-bedroom apartment, it would cost you a lot more money.
You could add probably another $150 to $180 per week if you're paying your own bills, and you're having to buy washing machines and beds and fridges and coffee tables and et cetera, lounges. So when you break it all down, renters are very savvy with their money. They look for value, and they find the value in a large 30 square metre room to 60 square metre room. They find that they're actually getting a lot of bang for their buck.
It's a bit like a hotel suite, really, isn't it? Like, in a way, that's what your rooming houses look like. When you walk in, it's like a luxury hotel suite accommodation.
Yeah, it is very convenient, it's very affordable, and people love living it. We get renters that look around for accommodation. As soon as they walk into our rooms, they literally say, wow. I mean, our rooms and our rooming houses do have what they call the wow factor.
Yeah, okay.
So we have no problem filling them.
What would you say is your average vacancy rate for your properties right now?
Like 0%.
0%.
Like, as soon as we've got residents vacating, they give us notice. We do ask them, weeks ahead if they'll be leasing the room, and if they say that they will, and most of them do, but if for work circumstances or personal circumstances they don't lease the room, then we put it back on the market, and pretty much we've got it filled. So there's generally about a day or two between turnover from one resident to another.
So let's talk about your builder now, and who's your builder and what is their track record for the people that might be worried about, builders going broke and all that?
So we've set up our own company called BRH Constructions. That's Brisbane Rooming Houses Construction. So I'm a now a director and a shareholder. I started as a developer and a designer of rooming houses. So now I'm actually involved with the construction.
Okay.
So my builder is Justin. He's 35 years old. He's got a diploma in construction management. And he started out as a carpenter. He's worked for big builders, developers. He's done apartments. He's done commercial properties. He's just completed in Townsville a 24-unit, $13 million NDIS project, which he designed himself. Like, he can literally build anywhere in the country. He's very nimble, very mobile. We're now building, in other regions in Queensland. So he's got a great team behind him. He produces all the construction programs for every project. Very professional.
Paul is end to end. What he says that he's going to get in terms of his yields and his numbers in terms of rent on the back end, that's what he's achieving.
Yeah,
that's what
yeah.
he's pushing for.
Fantastic.
He's then pushing the real estate agents. No, it's not enough.
Yeah.
We need whatever it is that he said for the room, and he will just go hard and get that down to the point where he's reviewing tenant applications.
Yeah, okay. Wow. Okay, for his clients.
That's what I'm saying. Like,
yeah,
he's getting right into the
very
detail.
hands-on. Yeah, okay.
And so I like working with him because everything is covered.
So how can the buyer be ensured that the property is going to be completed and they're going to get it as promised initially?
Because I control the whole process. So not only am I the provider and the designer, the owners actually sign Brisbane Rooming Houses up as their agent. So we're obligated to the owner or the investor. So they sign an agreement called an owner's agent agreement. That puts the responsibility on Brisbane Rooming Houses to deliver it. So we have mechanisms in the building contract, which means that the builder has to stick to the number of construction days. There are penalties that are inserted into the contract if he doesn't. There's a commencement time, there's a completion time. We get all that information and we send it to the owner. So the owner, the broker, the financier, they get all those documentations.
Okay.
Right? So I control all that. There's no other provider out there that does all that.
Okay, fantastic. And so how long does it take normally to build a rooming house from contract, say, to completion?
The low set's about 5.5 months. The high set's about 7 to 8 months.
And what kinds of inclusions are standards in your builds, and how are they better than some of the other ones you see in the room?
Where do we start? Like, the specification sheet's about 30 pages long. We could go through everything.
Okay.
But look, essentially, the first thing I ever did when I went into rooming accommodation was to find out what the problems were. And I spoke to the one or two agents that were doing the management of rooming accommodation, and there are issues. So one of the biggest issues, in fact, the biggest issues is noise. If you don't arrest the noise issues, you're going to have high turnover of residents, because we've got people that are shift workers, and if somebody's watching TV and someone else is trying to sleep in another room, or they're on their phone or playing music, you've got to arrest the noise issue. So we do a lot in the house to make sure that the rooms are like recording studios. They are cocooned. There is no noise leaking between the rooms or from the common areas into the rooms. So that's one thing that we do. But if you look at the styling, the designs, what we include in all the rooms, you'll find that we include a lot more for the resident. Therefore, we've got happier residents. And I always say, happier residents makes for happy owners. We choose all the furnishings ourselves, and we furnish the houses ourselves. The other builders don't do that. The other marketers out there don't do it. We're the only ones that do it. So we select all the furnishings. The way that some builders do it is they finish building, they will refer the investor to a real estate agent, and then the real estate agent normally gives them a kickback or a commission for getting the listing or getting the property management. And then they sell their furniture package at about the same price that we sell ours, but they're putting much less into the furnishings. So they're actually shortchanging, in my opinion, the investor by putting as little as possible into the rooms, which means it affects the rent. What we do is we have commercial and wholesale agreements with all the big furnishing appliance companies, and we buy at wholesale prices and we pass that exact cost onto the investor. So the investor's actually getting about 20% more dollar for their bang for their dollar than what they're getting from others. So essentially, you're getting about $40,000 worth of furnishings for about 20 to 30% less.
Okay, so you're saving money on basically very good quality furniture rather than okay. Can you just tell me what are the average land sizes and build costs for your current projects? What are the kind of the criteria for if an investor wants to buy one in terms of what size land they would need and what type of design would go on that size land and so on?
Look, we can start from as little as 330 square meters, on which you would have to put a high set home.
Yes.
But typically we would say we prefer no less than 400 square meters, so we can put a low set on. So a low set is better value for money. Low sets cost less than a high set. And pretty much we can get almost the same sort of rent from a low set as we can get from a high set. So we prefer 400 square meters. We built them on blocks of land as high as 700 or 800 square meters with a low set, depending if it's subdividable or not. Depends on the council.
And how small the land? What's the smallest block?
330 square meters. I won't go smaller than that.
Okay. Okay. Otherwise, you don't have the outdoor areas. And
well,
so on.
you need car parking. You need there's setbacks. There's and you would have to put a high set on it.
Okay. So what compliance or certification do you need for a rooming house in Queensland, and do you handle this for the investor?
We handle all of it, we handle that. So we take care of it. It's a technical thing, but essentially we do certify them for their purpose, which is as a Class 1B rooming accommodation house.
Do you offer any rental guarantees or anything like that?
Oh, look, we have, but we don't need to. Rental guarantees is more of a sales gimmick. So we find that as soon as we put them to market, they rent.
So how does the property gets managed? Who manages it, and what are the costs for having it managed?
We have our own property management side of our business. So Michelle looks after all that. And so we're at 6% plus GST, but importantly, we don't have added fees and charges. We know other people that are coming into this space or have recently come into this space are claiming that they are low property management fees. But when you look at, have a closer look at the leasing agreement, they're filled with per room extra charges.
They've got hidden charges.
There's so many, they're stacking it full of hidden charges. So they're nowhere near the lower rental agreement fee. They're actually much more expensive than what they say.
Okay, so it's not what you said, what you get on the...
You've got to read the fine print.
Yeah, but it's 6.6%, I think, is your...
including GST.
Yeah, which is a really good rate, okay.
We focus a lot on leak income. So this is the leaking of your income when your rooming house is completed and it's operating. So our operational costs are typically around $16,000 to $18,000 a year, where other rooming houses can be as high as $40,000. So we're looking at all that information. We're looking at where the leaks are. So this can be anything from insurance to power bills, could be anything from rental or property management fees. So we're constantly putting downward pressure because a lot of people just look at the price of building a rooming house, but they don't think of what actually ends up in their pocket afterwards. Typically, if a rooming house is generating in gross income about $120,000, I say allow about $16,000 to $18,000 deduction every year, which, as I said, can include anything from your rates, your insurance, property management, maintenance costs, cleaning costs.
So it's about 15 to 20% of the rental.
Somewhere around that, yeah.
Okay. Well, that's substantial, less than other ones that are in the marketplace. Yeah, that I've seen. can this be bought in a self-managed super fund?
Yes.
Okay.
They can be bought completed in a self-managed super fund. The ATO doesn't let you build or develop in your self-managed super fund, but we've got a way of doing that. So we've got a partner that helps to convert what they call a two-part contract. So a two-part contract is when you buy the land and do the build. That's two contracts. So what the ATO wants you to do is not develop in your super fund because they want you to actually have a cash flow property or investment that's actually supporting you in your retirement. So we've got a partner that does that.
Okay. And they can convert it.
That way they can convert it into a one-part.
Do you help with finance or work with brokers who understand rooming houses?
So we've got a major lender that's worked with us from our very first project, and we've worked with a number of brokers. We typically have worked with one broker. If you come to us, we can introduce you to the broker. So these are brokers and lenders that specialise in rooming accommodation. It's a very specialised type of funding. Generally, if you go to the banks, they'll say no, like the big four banks will say no.
Yeah.
If they do say yes, normally you've got to put in about 50%, maybe sometimes 40% deposit, and they look at it as a commercial, which if you've got more than 4 rents, they look at it as a commercial and pay high interest, lower LVR, whereas if you go to a specialist, our lender can go up to 75% LVR.
Okay, fantastic. What happens if one tenant moves out? Does it affect the whole rental income?
Well, if they break the lease, there are rules around breaking a lease, so they do have to fund the shortfall. So that's normally done through the bond. There's a bond there.
So tenants pay bond,
but we've only had 1 or 2 that have told us in advance that they're going to have to break a lease. We've never had anyone that's actually just disappeared on us and not paying rent. It's normally because of a work change or a personal situation. And we will usually work in with them.
So can you tell us, can you share 1 or 2 success stories from your past investors that you can think of?
We had this husband and wife team that had come to us, and they had just purchased a house on a very busy road in North Brisbane, and it was getting very poor return. It was only bringing in about $450 a week, and they asked me if they could subdivide it, but it was under the threshold. It was under the 800 square metre threshold for a low density house. So they asked me what I would do with the land, and I said, if it was my property, I'd sell it. And they said, well, we're not doing that because we've just bought it. So we just settled on it. So I said, well, what we can do is a very large, low set house, and we can get you around 500 to 520 a room, which is what we achieved. So I predicted that we could get them $130,000 in income, and it was spot on, and it was valued completed at $1.6 million. They paid $695,000 for the land. 12 months later, it was valued at $1.6 million.
Wow,
by a professional. And next door, the houses next door, I've looked at their recent valuations, around $800,000. So it's actually valued at double their neighbours' blocks.
Property.
So they had enormous capital uplift, and they used the equity from that to then invest in a new project. So they're currently doing a subdivision with us for 2 rooming houses, which we're just about to start building.
Okay, and what's kind of the inspiring feedback you've got from, say, investors or tenants once they've invested in one of these properties?
Well, it's always happy, positive.
Yeah.
I've been doing this now for nearly 8 years, so I know my numbers, I know my rental income, I know my product so well. I do the appraisal, so the agents don't do the appraisals on our rooming houses. There are 1 or 2 valuers that are the top valuers in this space. They come to me and ask me to provide the rental appraisals, and they use those numbers to then value the house.
Is there any council restrictions or risks that investors should be aware of when investing in a rooming house?
Look, in Queensland, I wouldn't say it's a risk, it's something that you've got to allow for. So in a lot of councils outside of Brisbane, they will charge you infrastructure charges per room when you certify of about $26,000 per room. You've got to allow for that So it's about $90,000 to $95,000 extra for a house. That's outside of Brisbane. I think there is a couple of other councils that don't charge it, but you must be aware of that. I'm not sure whether that's brought to the attention of all investors that are looking at this space, but they need to be aware of it.
Yeah, okay. So how do you decide which type of floor plan somebody should, go for? Or
Well, we decide that. That's what I do.
based on the land?
That's what I do. It does depend on the land, but what we try to do is be smart about the floor plans, so that the houses actually flow. And I always put myself in the position of living in each house. So I come up with those concepts with my designer, and we play around with those depending on the land. So typically for a 10-metre frontage by 40 metres, we have 2 or 3 different designs and models of floor plans.
Yeah.
But the investor doesn't really need to or care about the floor plans because they're not living in it. They just want to know that the income,
What the income's like.
the income's going to be.
Yeah, okay. So what's included in the turnkey price, like driveways, fencing, landscaping?
So we include in the turnkey building price the whole construction of the house. Solar, so we put a minimum of 15 kilowatts. We give options to up it to 20 or even more kilowatts. The landscaping, so we do more landscaping than anybody else, and landscaping is important. A lot of rooming house builders will just go concrete all the way almost to the fence, and it looks really barren and it's unappealing. When you look at our rooming houses 2 or 3 years later and they're flourishing with vegetation, they look beautiful. And you can go to our website and have a look at all the landscaping that we do. So we put a lot of emphasis on that. It includes the concrete. So we just don't do the normal brushed concrete car parks. We actually use salt and pepper aggregate. So we use the best quality everything. So solar, fencing. The fencing, we do colour bond fencing. So everyone else seems to be doing timber fencing. The problem with timber fencing is that it's prone to termites, so they use raw pine. After a year, the fence is gone grey. It's getting, it's subject to weather, termites. It starts to collapse. It starts to twist. I always say that you're not saving money on fencing. It's actually going to cost you double.
Yeah.
It really is going to cost you double. So at the moment, we put colour bond fencing, but we found this new product which we think is better than colour bond fencing. It actually looks better. So it's a WPC, which stands for a wood plastic composite product. So we're always innovating, not just in the house, but on things like the fencing, the concrete, the landscaping.
You mentioned like gross yields of between 9 to 12%, some even higher potentially in some of the regional areas. What's a typical net return after costs like the property management?
So we're
fee,
saying, look,
insurance?
allow a deduction of about 1.5% roughly.
Of the gross.
Of the gross yield. So if your gross yield is, say, 10%, deduct 1.5% gives you 8.5% net yield.
How do you achieve that?
As I said, we spend a lot of time looking at the operational costs. So this is property management fees. This is insurance. So there's a bunch of different insurance options for you, depending on what you want insured.
Okay.
We look at everything from our power. Power is absolutely critical. We do things in the house that nobody else does that keeps your power bills down.
Okay.
So that's a bit of a trade secret. So when you look at all the big ticket items in your operational costs, we actually shave thousands of dollars off compared to other rooming houses.
How much can an investor typically claim in depreciation and say year one?
That's probably a question for an accountant, but it depends on a lot of factors. But essentially, probably around somewhere between $20,000 to $30,000.
Okay, because of all the fittings and so.
Well, you got plant and capital. Basically means the house itself and the plant, which is the furnishings.
Properties or self-managed super fund, but you can assist with.
Yeah, we introduce them to the right people.
Okay.
So that will get down to things like servicing, income. How many properties do you have? Are you prepared to sell some properties? Do you want to draw equity down on your principal place?
But they got to go to the specialist broker, right?
They got to get a specialist.
Yeah, not just
our specialist brokers actually are more than that. They're almost like financial planners. they can actually restructure them and help them restructure. So it might take a few more weeks or months to do all that. But we've had one client in particular that springs to mind. Our broker was able to save them $4,000 a month on their repayments simply by restructuring their portfolio. Now, it took probably 3 or 4 months to get that all sorted, but it actually helped and benefited the investor, and they were able to successfully go into a development project. I do all the numbers, so I do all the projections of the costs. I've got a massive spreadsheet, which Peter, you've seen, and that spreadsheet is like 14 sheets long, and it gives us a summary of all the costs. We hand those costs to the broker. We provide all that information, and we've never had a development or a house build declined.
If a investor wants to come on board with you, can you walk us through the process? Exactly what happens, for somebody that wants to invest in one of your properties? What has to happen in order for that?
The process is essentially we act as their owner's agent. They get an owner's agent agreement. They pay us an engagement fee, and then they pay us the service fee to do all the work for them on their behalf. So we act for them, and then we will provide them with pricing. They pay for all the documentation, so we give them a list of all the documentation costs. So there's things like the preliminary and working drawings, the engineering, the hydraulic drawings, the energy efficiency, all the approvals, all the certifications, et cetera. So they pay for that, and then they get a contract from us to sign up. We actually act as their owner's agent in the contract. So we sign the contract on their behalf, and then we manage the build.
What is the difference between your OOA and DMA contracts? Number one, what are they and who are they for?
Okay, so the OAA is the agreement that we were just talking about a few minutes ago. That's the owner's agent agreement. So that's when we have a vacant block of land and you only want to build one house. Most investors are quite inexperienced in building, and they don't know how to build or how to control the builder. In this space, there's a lot of builders taking on a lot more work than they can handle. So other builders are actually breaking out to 12 and 18 months past contract completion. We control all of that. We control the whole building process through the owner's agent agreement. So we signed the building contract on behalf of the owner as their representative. So a DMA is a development management agreement. So that's if you're doing a development. We've got a lot of clients that have either bought or are buying or want to buy one lot that they can subdivide into 2 lots. So
okay, so that's a more lengthy process.
Yeah, it's a more sophisticated process,
Yeah.
but you end up with 2 rooming houses.
Okay. I've had a client ask me, one of these properties, I can only sell it to an investor rather than an owner-occupier.
There's more investors out there wanting these products. They're not designed to be sold as principal place of residence. It's like saying, well, if I buy that commercial property, can I sell it to someone to live in as a family home? No. You're selling it to another commercial property investor.
This is there to make you money. And if you want to make the most money, you invest in this type of property.
Yeah, and if you're going into a property investment like a rooming house, you're going in there with your eyes wide open. It's like, you know what you're doing. And can you sell it to somebody afterwards? Well, you're selling it to somebody who wants to buy.
Oh, have you had any properties revalued past completion, and how do they stack up for equity release refinance?
Yeah, well, yeah. It depends on how the broker does the loan. So they might get a construction loan, then it gets refinanced later with a different lender generally for lower interest rates. So they're usually valued towards the end, and we give a property rental appraisal and give that to the valuer, and the valuer uses that for the bank funding.
Who manages the properties long term, and what makes your management team better than traditional rental agency?
So we are now doing our own property management. So we're a licensed real estate agent, and we've got a team of property managers that handle all of the back end and the front end of the property management. We do it for 6% plus GST, but there are importantly no extra fees and charges, and we're the only ones that don't do the hidden fees and charges.
Okay, so it's a flat fee, you know exactly what you're paying for.
Except for when there's a release, there is a fee for the cost of releasing that room. But
Which is
other
1
than
week's rent, isn't it?
1 week's rent.
Yeah.
But other than that, there's no
Everything is included.
There's no other hidden or added charges. I just caution people to read their lease agreements, because you'll find that there's a lot of sneaky charges that a lot of property managers put in.
So people are saying they're quoting lower rates, but when you add up all the extra charges, they charge for lease preparation, they charge for lease re-signing.
Oh, they charge things for like per room fees, which
Yeah.
I think is ridiculous, because that should come out of their property management. So
Management
they're
fee.
only telling people we're at this property management rate, but they're not telling them about all the extra, especially in their advertising. We see this deception going on. We also see that they're charging for renewing the utilities bills or accounts. So we're talking things like, water and electricity accounts and NBN, and we're saying, well, those accounts are paid by the owners. They're not being changed into different names. So they're actually engaging in misleading and deceptive practices, which says a lot about those property managers. We don't play those games.
Okay. How am I going to get tenants? Like, let's say the property is finished now. How do you ensure that they're tenanted from day one?
Because we do all that. So basically we advertise for that, and we screen everyone. So we have a process where we go through a lot of background checks. And I learned this very, very early on when we had a property manager managing our rooming houses, and they did no background checks, and subsequently we had really bad tenants that were problematic, and the agent said that they do background checks. They didn't. So we are now finding that if we use our own processes, our own filtering processes, that we get a better quality of tenant, but we get a more responsible tenant who basically respects the other tenants. So we also have house rules. Those house rules they've got to sign as part of their leases.
Yep.
So there's a lot of checks and balances we put in. So we've got to protect not just the other residents, we've got to protect the owner and the investor as well.
Okay. And typically, how long will it take to lease my property once it's built?
Generally, once it's new, it can take anything from, we've had them as fully leased in as little as 2 weeks up to 6 weeks, depending on the area, depending on the rents. But generally 2 to 6 weeks will fill your house.
And what sort of leases do normally people sign?
Or it's actually a rooming house lease. It's a particular type of lease.
But is it 6 months, 12
Oh,
months?
sorry, it's 6 months to 12 months.
Okay.
And generally we find majority of them, they renew the leases.
Okay, fantastic. So because of the quality of the accommodation, they love, yeah.
Let's just put yourself in the shoes of a renter, right? If you're not happy with your accommodation, you look for something else. But if you're happy with your accommodation, you don't look for anything else and you just re-sign. So we try to make the renters, the residents, as happy and as comfortable as possible.
Yep.
And I always say that happy residents make for happy owners.
Okay.
Because you don't want, poorly built rooming houses that have internal problems because they haven't been built properly, and that causes what I call resident churn. So that's a term that we created. That resident churn means that you've got a turnover of residents. What we try to do is stabilise the income, and that's by how we build them, how we screen the applications, and how we manage the rooming houses themselves.
Process. Okay. Can you just maybe tell me what are some of the biggest problems that people make when deciding on which rooming house to buy or where to buy it, and how you can avoid that? What do you think is the biggest mistakes that people make when
not doing their
choosing?
homework? So we've written this book, an ebook. It's over 50 pages, and it's basically designed to answer all the questions and to educate investors. Right? I say always educate yourself, because a lot of people walk in and they just go, can you build me the cheapest rooming house? And that's probably the biggest mistake that you can make, because you're going to have problems, whether it's structurally or whether it's in terms of operational costs or resident issues. Don't just go in and just say, I want the cheapest, because you are going to get the cheapest, but you're also going to get, there's this thing called buyer's remorse, especially when you buy only on price.
Yes.
Ask all the people who get products from Temu.
Yeah, and I noticed your rooming houses, they're much more attractive, both from the outside and the inside. So they're more attractive to the tenants, they're more attractive to people, maybe the investor wants to sell the property to in the future as well, correct?
Yeah, it's not only the designs and the attractiveness, it's actually what we do that no one else does in terms of the specifications of the houses.
Yeah.
We actually avoid the problems by addressing them before we even start building.
Yeah, and you mentioned something like, for example, your walls, you use a thicker soundproof.
So before I started, I did a lot of research into problems, and the biggest problem being noise. I had an acoustic engineer write me a 109-page acoustic report, and that taught me or told me or advised me what I need to do to eliminate all the problems in a rooming house in terms of noise. So we do use particular type of wall linings. We don't use just the typical 10mm plasterboard that everybody else uses. We use a much thicker product that is used in recording studios, and that's between all the rooms and all the common areas in the rooms. And we also put a lot of compressed padding, or this is like an internal bat that goes between the walls. So we have reduced significantly.
It's like noise insulation bats, are they?
Yeah. Yeah, there are particular noise rated insulation batting. But we also use acoustic wall panels as well in the houses. So things that no one else is doing, we just don't care what anyone else is doing. We just do the best we can.
So in terms of comparing your product to everybody else's, would it be like comparing a Hyundai to a Rolls Royce?
If you say so. But look, this has actually been affirmed by the residents, the owners, even the valuer. So there's a key valuer who works for one of the biggest rooming house valuation companies, has said to me, I value your rooming houses probably $200,000 to $300,000 more, because I can see when I see your rooming house, and I've been through all of yours when they've been either sold or whenever there's been rooms for lease, I walk through. So he walks through a lot of rooming houses to compare, so he understands the differences between the different builders and the different providers, and has said, I can see from your specifications, your plans, I can see when I walk through why yours get so much higher rent, and therefore we value them higher. They're a better product.
Why would somebody build a rooming house from scratch rather than buying a completed product?
Two reasons. Number one is because there's just not enough of them on the market for sale. So if you want one, you pretty much got to build. Number two, when you do buy one on the market, you're generally paying retail price.
Yes.
When you buy a block of land and build, you're doing it wholesale, right? So generally, once you've completed it, you've built it, you've generally, in our case, got anything from $150,000 up to $300,000 in uplift.
Okay.
So people do it because they say, well, I want that uplift, I want that capital. So if it costs them, I know, 1.3 and then it's now worth 1.6 completed, then you've just what I call manufactured equity.
Okay.
And typically, if we do developments, it might cost, say, 2.4 to 2.5 to develop and build.
To split into two.
And then we cut it to two, and we do two rooming houses, and combined they're worth anything from 3.1 to 3.8 million.
Okay.
Right? So you've got that that massive capital uplift.
And also you're getting higher returns because your entry cost was lower, so your return, your return of income is much higher.
Well, it's both a manufactured capital growth strategy, but it's also a massive cash flow strategy. It's both. So investors tend to look for either or. They'll either decide, well, I'm going to buy in this area so that in the future I can get capital growth, but I'm not that worried about the income from it because I'll negative gear it or whatever. But negative gearing will kind of stop you. You might get one or two properties, whereas if you do positively geared cash flow properties, you tend to be able to then use that equity to go to the next property and the next property and just keep pulling the equity out going to the next one.
Good day. If you're looking to invest in a high income property in the next 3 to 12 months, and whether that's buying an existing property, building a new one from existing plans, or developing land you may already own, then my team and I at Sun Property Institute would love to help you. What we're offering is a free one-on-one strategy session where we'll map out exactly where you are now, right, and where you want to be, and outline the best possible high return and capital growth property options to help you get there faster. Some of the things we'll walk you through is like which property types and strategies are best for income, tax benefits, capital growth, paying your mortgage faster, the best cities, suburbs, areas for future capital growth and returns, and how you can build a property portfolio that could retire you within 10 to 15 years, starting from as little as $70,000 investment. Now, just go to www.Sun Property Institute to book that session and just click the button on that website to get your free strategy session, or there's a link near this video. If there's a link there, then just click that link. And look at our website. You can also get a copy of a download of some of the books you can see behind me that I have written on property investing, and they're also there on our website. Now, you can take all that information and look, you can run with it and do it all on your own. Or if you like what you see and there is a fit between us, then we can work together with you to help you reach your goals. And either way, you'll learn how to invest smarter with less risk and build your financial freedom with more confidence. So book that call now and book yourself in that session. And either way, best of investing success.